All right, your first guest today says that if we get lower rates, again, big if, it could bring new buyers into housing and some housing-related stock. For more, let's bring in Charlie Bobrinskoy. He is vice chairman of Ariel Investments. Charlie, it's great to have you on. I mean, you just heard Steve's comments. Listen, what the Fed does and what the bond market does can ultimately be different things. As we are kind of finding out, the Fed cut last year, bond yields rose. What do you think would happen to actual borrowing costs, not the Fed funds rate, if the Fed were to cut rates?
Well, they'd be heading down because we are at slightly above neutral rates. If you look back at long periods of history, risk-free rate has been somewhere between 1 and 1.5% above inflation. And we are trending down now towards, let's call it 2. And so that would put the natural interest rate at somewhere between 3 and 3.5. And we're north of 4. So interest rates, and I'm going to be with Chairman Powell and have humility here and not be able to see the future, particularly the short-term future, very quickly. But directionally, interest rates are going to come down. So in a market that's relatively fully priced, you got to look for value. And we think interest rates are on the way down, and that's going to be good for housing stocks because we're not building enough homes. So
we had like this 3-week period, Charlie, a couple of months ago where the 10-year was at like 3.5. Like bond yields sold off. Mortgages fell below 6% in some cases, and then it rocketed back higher. It was kind of it was a very bizarre sort of 2-week, 3-week period in the market. What makes you so confident that rates indeed are going to begin to meaningfully decline? Because a lot of people out there watching or listening right now, they may want to buy a home.
Yeah, remember I said no crystal ball in the short term. Yep. I'm not highly confident. I am humble about my ability to make short-term predictions, but I'm talking about a long-term trend. In general, when things are above average, regression to the mean says they'll move towards average, and that would mean longer term a drop in rates. But you're absolutely right. We got rates spiked up. Why did they spike up? Because President Trump announced these massive tariffs, which are inflationary. Tariffs are a tax that gets passed through and paid by somebody, and tariffs are inflationary. And the Fed saw that, consumers saw that, businesses saw that, and raised their expectations of inflation, and that made interest rates move up. I think we're getting past that. People think President Trump's not going to do anything really stupid here, but there's a lot of uncertainty.
All right, let's talk specific. Listen, it's Friday, right? We're heading into a summer weekend. Let's try to find some opportunity. Mohawk, not a household name, but I guess if you have carpet or other kinds of flooring, Mohawk is probably the company that owns it.
They are the leading player in this space. They are not just carpets. They are luxury vinyl tile. They are hardwoods. They are some countertops. They are a real player in floors and surfaces. And they've been hurt by the downturn in housing starts. You know, we're starting about 1.2, 1.3 million homes a year. We were building more homes than that in 1959 when the population was half of what it is today. So we've got pent-up demand for housing. Mohawk's been hurt by that, but the stock's trading at 9 times what we think is trough earnings. When we get back to normal housing market, Mohawk should have significantly higher earnings from here.